Hey, what's going on, guys? I'm doing a recap on what we did this morning just briefly. I want to talk about big picture, hit a little bit more on markets. I haven't did a video in a while on a couple of bigger picture global macro things. So let's do that. And then I want to let you guys know about the webinar I'm doing this Thursday. I'm going to talk about a couple of what I call pairs trades. So some guys will talk about relative value. Really, we're trading more directionally intraday, more like a pairs trade style of play. But we're going to talk about that intraday, and then also big picture into the back half of the year. There's some really nice setups. For example, like long Amazon, short the Russell, that I want to talk about. You can go to jenkinscm.com this Thursday. I'm going to talk about, again, some of our day trade strategies, some of the longer term core ideas. And then you can kind of ask me about things in the market right now that we like. Maybe I'll talk a little bit about options play. Like it had a pretty good day yesterday, and straddling the volatility. You don't always have to be a bull or a bear. You can just pick your spots on the vol if you know how to structure it right. And then you can, if anybody's new, they want to talk about some of the cycle or cyclical stuff we do and some of our timing edges. We're going to go over that Thursday. I'll send out a couple of emails to follow up on that. But all right, big picture. I guess you can argue that the U.S. central banks, Congress, the spending, the deficits, the way Munchin administration is posturing, we're probably more aggressive right now than a lot of the other countries or central banks. So this dollar weakness is probably going to kind of continue unless something changes on the margin. But the key levels here is we're going to be coming into pi on the weekly. So there was a lot of dollar bears that got loud here in 2018, just because we were below the 200, even though that was rising. And then our cyclical stuff still had you long the dollar, and that's actually when we had a turning point. So this is going to be very key for the dollar here. If we can't hold this low, call it 95.5 on the weekly on the DXY, but then definitely the lows from March. If that gives way, then you can open up the door for a move back to 90. And if that's the case, then commodities are going to continue to do well. So the other side of that, I would say, is keep an eye on oil. This major level around 41, 42, 43, depending on the contract, but that was the support the last couple of years that broke. We gapped through it, went negative, and now it came all the way back, and still haven't been able to regain that area. So I'm not entirely convinced of this kind of reflationary commodity bounce, especially when I look at things like copper. I mean, it's extended. Same thing with the Aussie. It's had this crazy one-way move where you couldn't even get above the 8. We haven't broken any lower lows in the intermediate term. You got through this trend line, but you've got these highs here around $3. I think is really the line in the sand. You put in a pretty good topping tail yesterday. I sold a little bit, just my third lot. And I'm not going to add to it unless we start to break the 8 and break the intermediate term down. But this is a good example of the reflation that's happened. I mean, if that's what you want to call it. I mean, we really just went from completely depressionary, crazy negative levels on things like oil to a bounce. So it's not like we've got rip-roaring inflation. It's just more of a deflationary reflation, really. So we'll see if that continues or not. I mean, we need that. The Aussie would need to break back down. China's been pumping the shit out of their stock market, so it's actually bullish trend now. That's completely new for the last couple of years. The Nikkei, you look at like the bigger cap names there. FXI not really at new highs. The Nikkei still in a lower high posture, especially coming off nasty lower lows. I think you're going to get lower highs into the end of the year. But again, you'll see when I'm shift over to the Nasdaq and these other U.S. indices, you got to break this 8. So it's one thing to want to fade something, but you can't be aggressive, guys, until you get lower lows. It's going to keep you out of trouble. There's plenty of money to be made on long stuff on these pullbacks, like the things we like Amazon. the Nasdaq. So what needs to break on the Nasdaq? I was following this regression channel. We failed at the upper end of it. We were in a tighter channel prior that we extended through. So right here at the bands on the 4-hour, and then if you can't hold that, I would say it's this 10,000 level is pretty big. It's a 200 on the 4-hour. It's the right spot on the daily that we need to hold. I went back to the long side of Amazon this morning just because that's one of the names we like, and it was oversold, it was overbought coming into this week. So you don't want to be chasing at 3,300. You want to be buying back down here. And so keep trading that around on the long side. Touched on copper. Gold is still one of our favorite ideas. I bought a little bit here around 1,800 this morning. That was pretty good timing. I do kind of want to get more, I guess, aggressive or active on that. I've kind of been missing a lot of dips, so I'm going to try to tighten up that. That's kind of a good long on the other side of short copper. You can trade those two off each other good. Again, that's another pairs trade. Let's just talk vol real quick. The VIX, we had a nice call. Our team was getting long some VIX calls here on the lows of last week, and then you're getting rewarded a little bit Friday, and then again here this morning we went to pretty good levels. So you can trade this several ways. I mean, we're buying calls on the index or the cash actual index. You can be short the futures like I am, and you get an opportunity to sell some futures this morning if you wanted. Trading those off each other, and then I've done some webinars where we talk about UVXY. I've kind of been waiting on higher levels to get involved on the core short on that. Inverse ETF, 40 areas kind of has my attention. What else? Oil I touched on. Some of the other commodity names, I mean, you're starting to see some of this stuff try to do better, like wheat. You held the long-term weekly channel, the monthly there. I've been highlighting that at 4 3/4, call it 500. You know, there's some stuff here that's trying to break out. Silver is one we talked about, longer term, finally going to get maybe a higher high. And if we do see a down dollar and we break towards that 90 level, silver should do really well. Just on a technical basis, it can do better above 20. I think that's all I want to say about commodities. They're firmed up, but they're really not longer term rip roaring bull markets yet. I think that trade's coming in the next couple of years is just not quite there. And then lastly, bonds. So treasuries, we're just been playing both sides. So I came at us some long in tens, bought pretty well on the pullback into late last week. If I have the signals up, you can see that. Tens. Anyway, I was buying down here around 06, 07. Came out of half today. I'm short a couple 30s. I would sell higher, maybe back towards 181.5, 182. So I'm playing, if you get the inflation trade with all the supply and the disaster that is our deficits and budgets, that maybe that weighs on the long end. But there's plenty of reasons to be bullish in the belly or tens also, or the very front end, even though I'm not sure how much room we have in twos and euro dollars. So I think you continue to see that be choppy. I mean, if you got a way you want to play like tips or treasuries with the inflation protection, probably break evens has been a good place to be on the long side. But all that makes sense. Yeah, so just to highlight what we did today, I kind of was a little bit frustrated. I was up trading London, and when I spend that much time in the mornings, I just didn't make as much as I wanted. So anyway, today was kind of simple, really. I want to highlight the difference between the Russell and like the Nasdaq 30-minute. So, you know, just a quick teaching point. If you guys notice, last week was a lot of pullbacks, kind of quicker declines, pullbacks, and then grinds higher. Pullback, grind higher. Pullback, grind higher. Yesterday, you couldn't hold the bands, and then you get the secondary flush. You get the bigger pullback to pie. So that was a good chance to short yesterday. I think some of you saw it, but maybe didn't quite catch as much as you wanted. But notice when you break the bands here that now the structure is different, and then the vol starts to pick up. So you're going to have less algos buying, but the trend was down this morning. I would have loved to see you had, I mean, you had a good move down in London, and to get a bounce and then some follow through, it would have been nice to get maybe one more secondary move this morning on some higher energy. But you got a bottoming tail, and then you came back up with the 15-minute and 30-minute cycle. So, see, the way I kind of played it was, it's going to be a little bit sloppy. As short for the move down, and then I reshorted the Russell, but I also got long S&Ps on the backside of this cycle. That's what kind of played out there. I mean, you may get another move down on the Russell this afternoon. And then I missed on the Nasdaq. It came up and we tested the underside of the 200 right here. And I was already short the Russell, so I didn't really push it, but that was kind of frustrating in retrospect because that was a good drop. I mean, that's the perfect edge right there. Go back to the screen. Right here. This was a good edge right in here. So see, I missed that on execution. Missed that whole move. I caught it on the Russell down. Covered into the low. And I reshorted because I got long S&P that I worked at a little bit more on the long side. I don't know. So just probably could have done a lot better today. It's just kind of been like that this summer. Just little misses here and there, and just haven't really had any of the big days. But just being transparent, and that's just the way it goes sometimes. You guys experience the same stuff. The same thing like in sports. You know, sometimes you're crushing it. Sometimes you just start to kind of get it going the way you want to get it going. But yeah, that's probably it for this video. Guys, still haven't broken anything really big picture. I gave you the dollar levels that matter. I still like being a better seller on the Russell. I mean, it continues to make lower highs despite the Nasdaq. The market's just really paying a premium, guys, for the companies that are doing really well, where everybody else is really hurting. And the capital is going to go where it feels the most safe. It's where it's taken care of, and obviously tech still is a big part of that. But keep selling rallies. We covered the Russell earlier. I'm going to reshort anything high on a 4-hour cycle or a daily cycle. And then I talked about the levels they would need to break on the Nasdaq. So, all right, we'll see. Hopefully you guys get signed up. I'm going to send this out in an email. But yeah, if you go to jenkinscm.com, just right here in the next webinar, and then you can sign up right here. All right, Thursday, 3:30 Eastern. All right, guys, have a great rest of your trading day.